under this regulations regime, which sector, should we invest, in China in that regard? I think I would break it down into 4 different areas. One is policy supportive sector. And I suggest you go buy the stocks directly. You don't even need an active manager, because those we are talking about 10, 20 years theme. You don't need to pay double layer fees, go direct. So definitely electric vehicle, green energy sectors is something that, there is strong, support, from the Chinese government. In particular, they want to get away the dependence of oil, from Middle East. So I think, this is a very, longer term sector. And second is a high-end manufacturing sector. I think, we are talking about dual circulation, internalization. High-end manufacturing sector is a long-term supportive, from the Chinese government. And second is mid-caps. So if you look at, the sectors, I think if you look at the mid-cap, the earnings growth in China this year, we are talking about, in particular, some of the higher tech, 30% to 55%. But the CSI 300, we are talking about 22%. So the mid-cap area is something that you would also want to pay attention. And the second area is less policy-sensitive sector, which I've been talking about in media for a long time. It's middle-class consumption upgrade. If you look at China, you go to the shopping mall, people eat, wine, and dine, lining up in front of Chanel and LV. The younger generation, they spend, 50, US dollar per hour in terms of, gym payment, because, it's a very well-known story that because of the one-child policy, actually they are supported by 6 people, their parents and then their parents' parents. So the consumer power of the young generation is very sticky. Millennial, there are about 400 million millennial in China. And we are talking about they create about 70% of the consumption in China. So in the PE space, I suggest, if you want to learn more about China, besides the secondary market, talk to more private equity manager, because the company that they invest kind of like in India, when they mature, it will be secondary market. And some of the hot sector in PE in China is the pet, the pet area, some of the beauty area, some of the dental area. I like soy sauce area. So middle class consumption upgrade, this is very less policy sensitive than you can avoid. But I think you have to find an active manager in this space, because the universe is so big. So you need some, bottom up work. And then the last 2 sector I would suggest is, I'm a little bit contrarian, but I've been asking or suggesting people to long the banking sector right after the education crackdown. And in particular, at this point, some of the banks are actually trading at 0.3 to 0.4 times price to book, and the yield is 5%. I think, the worst has gone. We worry about the NPL, real estate and everything. I think down the road, the NPL will go down. And this is a very government supportive sector, because the banking sector is well regulated, and 5% yield is quite relevant. And lastly, it's contrarian. Some of the tech mid-cap sector, I think is a good timing to long. We are trading at about half of the valuation, of the US market in general. So those are the 4, main area that I think, under this regime, I would suggest you take a look.